What's up, guys? I hope you're having a pretty good day today. I just left the gym, so I'm feeling pretty good. Monday's leg day for me, so we're feeling pretty good, pretty relaxed, so it's a good thing. But anyways, we're about to get into this trade that I took today. Very simple one-to-one trade, and I hope you guys take something from this video. Now, as you can see, as I always go on the weekly time frame and just work my way down and see what the overall trend is. And as you can see, we are pretty bullish for the most part. As you can see, we have this pretty big bullish candle on the weekly. We jump down to the daily. We see a pretty prevalent bull trend that's occurring right here. It's not the prettiest, but it's a bull trend nonetheless. And if we drop down to the 4-hour, we do see that at the time, this marked out high where this blue line is, was the point of liquidity that hadn't been taken yet. As you can see, since then, a lot of price action has occurred. But at the time, this was the point at which that was the resting high at the moment. Next, if we drop down to the 1-hour, I did notice that there was also some untaken lows down here that I figured would either be the draw or a liquidity sweep, because I wasn't entirely sure in what direction the market was going to go in, because I'm looking at all this price action to the left on the 1-hour. And we can see that it is a pretty, well, not pretty, but it's a pretty steep downtrend that we're seeing. And then we see a big up movement here, which breaks this high. And then we continue the downtrend there. So not gonna lie, I was a little bit kind of conflicted on what direction the market was gonna go in, because on the high time frames, we're seeing it bullish, basically anything from the 4-hour and up. But then on the 1-hour and below, it was looking pretty bearish. And even a bit on the 4-hour, because if you look at everything between, I guess, and this point, this was looking pretty bearish as well. So I wasn't exactly sure what my bias was for the day. But at the same time, we also had news, if I'm not mistaken. I think it was home buying and manufacturing. Let's see what it was. No, it was a flash manufacturing PMI, flash services PMI, and at 10 we had existing home sales. So we also had news today, as you guys can see from this screen up here. So I was pretty uncertain going into the day, but I was more so leaning towards being bullish because I like trading with the overall trend on the higher time frames. So now when it comes down to my entries, and on which I go down to the 5-minute, I was essentially waiting for any form of liquidity sweep or any drastic movements in the market. So this is the reason why I love the continuation strategy, because it really simplifies everything. So I was essentially very wary of this low right here to not get caught in that manipulation move, which, as you guys can see, occurred right here. This candle took out this liquidity. And then, as you guys can see, it simply reversed up this way. And it basically decided to have a pretty bullish nature for the rest of the day up until the recording of this video. So that was kind of my outlook. And then as far as my entry goes, as you guys know, I trade a very simple continuation strategy. I wait for a fair value gap and then a displacement candle out of it. And then I take my trade towards the draw on liquidity. And that's exactly what we see here. This ended up being a 435 or 53.35. Let me calculate that. I don't really remember. I think it was 35 though. How many points? That was 87. That was a $435 trade. Again, it's a very simple entry. I just waited for this gap to form, and then I waited for this specific displacement candle out of the gap to form, and then I just placed my stop loss under the body of that displacement candle. And then because we were so close to the drawn liquidity, which by the way was a 4-hour high, which I believe I showed you guys earlier, or maybe I didn't, but this is the 4-hour high that was present before a market open, and I was very confident in targeting that after I saw all of the bullish movement that was occurring on NQ after this big liquidity sweep. I guess some of you may be wondering, well, if you trade continuation, why didn't you take the trade off of this large displacement candle right here? A number of reasons. Reason number one is that there is no fair value gap that this is coming out of. I see fair value gaps as an indicator. If they're not there, the trade is a lot less probable to hit my take profit, and there's nothing really defending price from falling back to its previous level. As opposed to where I did enter off of this displacement candle out of this fair value gap. This fair value gap was a confirmation that price was going to continue towards the draw on liquidity. And that's why I trade continuation, and this is really the only setup I like and nothing else. Sometimes it's not a fair value gap, sometimes it's an inverse fair value gap. Let's say, for example, where is a good one? Maybe this one, because this occurred later. Let me see if this got inversed. I think it did. So this is not the perfect example because I don't like these wicks right here, but put simply, this gap gets inversed out of this candle right here, and then we see a displacement candle. It's not a perfect displacement candle. I don't like this big rejection wick that's here, but in theory, you could enter off this trade. You could enter off this candle, and you could probably target something like this. Just keep that there and then just target whatever previous highs, whether you could target those or those. It just depends. But that's just an example. I wouldn't have taken this particular trade considering that this was at like 1240. I'm already off the markets by 11, the latest. If price action is choppy and being stupid, I'm off by 1030. So this is really the only trade that I see myself taking, and I pretty much ignore everything else. My trading style has definitely evolved since the beginning of this channel. I basically used to look at the high time frame trend, which I still do, but my entries were different. I would be entering on the 1 minute and I would essentially be scalping the lows. However, this newer, I wouldn't say it's new, but this current style of trading that I have is a lot more high probability, and it allows me to also have larger take profits, which obviously makes more money. So this is basically what I do, and I ignore most other trading setups. This is the only one that I trade, and it kind of provides clarity. I think I'm at a stage in my trading now where I don't have to do more, I have to do less and focus on the few things that actually move the needle, right? So that's cutting out the bad trades and focusing on the good ones, that's risking more contracts, etc. So that's really the take from this video. I wonder if there's anything I didn't cover. I covered the draw on liquidity, I covered the liquidity sweep, fair value gap. So that's really it for me. If you guys have any questions on why I took this trade, questions about how I trade, questions about really anything, I'm a pretty open book. So just drop it in the comments and I will talk to you guys in the next one. Thanks.